Hi there. Starting employment without a P45 can raise questions about tax codes. Let's explain the starter checklist and what employers need.
A new hire logs in to check their very first payslip, only to realize their take-home pay is a fraction of what they expected. They've been placed on an emergency OT tax code, and zero personal allowances have been applied to their earnings. I'm an advisor here at Atlas Tax Advisors. For UK business owners and payroll managers, that shocked reaction is an immediate red flag for your PAYE compliance. You carry the ultimate legal liability for getting this right. The root cause of this first payday chaos usually comes down to a single missing document. The employee arrives without a P45 from their previous employer. Without those exact figures, guessing a tax code is a costly mistake. For the 2026-27 tax year, submitting incorrect or late payroll data triggers automatic late filing penalties under Schedule 55. Depending on the size of your business, those fines range from £100 to £400 a month. April 2026 also brings brand new student loan repayment thresholds. Employers are legally required to accurately calculate and deduct these payments from an employee's wages starting on day one. Relying on default guesswork because you lack a P45 means you are flying blind. It compromises your real-time information reporting and practically guarantees severe financial penalties from HMRC. The legal baseline for any new starter's tax position is the HMRC Starter Checklist. It replaced the old P46 form years ago, and it is the mandatory tool you need to collect their data before you process that first payroll. This flowchart breaks down the 3 critical statements on the checklist. If your employee selects Statement A, meaning this is their first job since April 6th, you sign the standard 1257L tax code. This applies their full personal allowance of £12,570 cumulatively. If they select Statement B, indicating they had another job earlier in the year, but this is now their only one, they receive the 1257L code. However, you must apply the non-cumulative Week 1, Month 1 modifier, which spreads the tax evenly across future pay periods without looking back at previous earnings. Statement C applies if they have a second job or receive a pension. Here, you use the BR code. The full gross sum of their pay is taxed at a flat 20%, without any tax-free personal allowance. If you fail to collect this checklist before the first pay run, you are forced into the worst-case scenario. You must place the new hire on Starter Declaration Code C and use tax code 0T, instantly taxing all earnings across applicable tiered bands. Capturing Statement A, B, or C accurately protects your business. It is the definitive legal mechanism that ensures you report the correct figures and pay HMRC accurately on that crucial first payroll cycle. Securing the correct tax code is only the first step. The starter checklist also demands precise student loan declarations to ensure correct deductions. This chart shows the newly elevated annual repayment thresholds for existing loans in the 2026-27 tax year. Plan 1 rises to £26,900. Plan 2 goes to £29,385, and Scotland's Plan 4 moves up to £33,795. The major update for April 2026 is the activation of Plan 5 student loan deductions. This requires a 9. If your internal payroll software isn't updated to recognize Plan 5 and these new thresholds, your real-time information submissions will be rejected. This leaves the employer directly liable for any uncollected tax. All the data collected from the starter checklist must be injected into your payroll software and transmitted to HM Revenue and Customs via the first full payment submission on or before payday. Once that submission is reconciled, HMRC establishes a feedback loop. If the starter code needs an adjustment, they will issue digital P6 or P9 coding notices directly to your system. You must apply these notices in the very next processing cycle. Ignoring them forces the business to cover backdated tax underpayments and automatic statutory interest out of pocket. Your HR team also needs to be prepared for complex payslip queries, especially from new hires earning over £100,000.
As their personal allowance is systematically removed, their earnings fall into an effective 60% marginal tax trap. To survive routine compliance checks, the law requires businesses to retain all PAYE records, including those starter checklists, for a minimum of 3 years. As a reminder from our team at Atlas Tax Advisors, tax legislation is dynamic. You should always seek tailored professional advice before making definitive payroll decisions for your business. Mastering the starter checklist and maintaining perfect synchronization with real-time information reporting creates a defensive wall around your business's finances. Reach out to Atlas Tax Advisors today for expert payroll support in the 2026-27 tax year.